Welcome to Mivan Charts. Starting with SPY, as we have been discussing in the past couple of weeks, SPY is still consolidating between this range 696 and 677. This 696 is acting as a strong resistance. We couldn't break last week also. Interestingly, I am noticing this pattern in SPY. Whenever it breaks down this pattern, bulls are stepping up and bringing it back up, like this here and during Nvidia's earning day. Then we have one here on here. The next day, bull stepped in and brought it back up to the resistance. Again, on last week also we can see this pattern broke down on Thursday, but on Friday bull stepped in and brought it back to the resistance level. But still 696 acting as a strong resistance. Looking at this Wednesday, Thursday and Friday's candle, looks like a bullish reversal candle like this. On the 4-hour time frame, we can see that SPY took the 200 SMA as a support previously, and last week also it took that support and it formed this gap. So if this gap acts as a support in the coming week, then we may again test this 696 level or even break out to the upside. If you look at hourly time frame, hourly time frame also we can see, though we had a drop on Thursday, we could see that we got a double bottom and a neckline breakout also in the lower time frame. So if this larger gap and this inverse fair value gap provide support in the next week, then we may advance to test this 696 level again. Looking at the weekly time frame, again we have been seeing a consolidation between these ranges, around 677 and 696 per more than 4 weeks. Now that we have this 20 EMA and the weekly time frame is closer to the current candles, so if you get support from this 20 EMA weekly to break this level of resistance at 696, then we may advance to the next fib level 703, followed by 707 and 712. So in order to make that, we need to break this resistance 696 or 697. Moving to Microsoft. Microsoft almost filled this gap and currently retesting this previous neckline breakout. And we saw an inside hammer candle on Friday session after the big drop on Thursday. So a critical level to watch if we are forming any kind of bullish reversal pattern on this level. See that RSI is on oversold position on the daily time frame. So yeah, maybe a good level to watch out for a bullish reversal. It was a strong resistance before, like 1, 2, and then we broke out on April. May 1st because of the earnings. Now we have filled that gap completely. Looking at the weekly time frame. At the weekly time frame also we filled this gap and we got support at this level, this previous resistance level, and RSI is around 30, like it took support last time here. So if we see a candle like this next week, then it will be a good indication of reversal at this stage, because we are currently at the long-term trend line. It took support from here, and then from here, and then from here. Currently we are setting at that level and fill this gap. RSI looks similar to the last time. So let's watch out for a bullish reversal pattern setups. Moving on to Apple. So Apple, as we discussed last week, it broke out of this inverted head and shoulder pattern. Even this short-term downtrend line, and it formed a fair value gap also, and an inverse fair value gap also, while it broke this trend. Currently it printed on inverted hammer or a shooting star candle at this resistance, and RSI is also closer to 70 level. So if it causes a reason to a pullback, we may watch out for these levels. 270 between this previous resistance, which may act as a support at 270-71 level, or it may come and test this gaps. Now we have this uptrend line also aligned to the major uptrend. That shooting star inverted hammer bundle exactly at the 78.6% of fib level between this high to this low. So we may expect a pullback next week on Apple to test these levels. It's currently at the resistance level, and then the next resistance is at this 284-86 area. We have support at 270-71 and this gap at 264 and 266, between 264 and 266. Looking at the weekly time frame on Apple, we got back-to-back strong bullish candles. If it wants to test the 50% of this previous week's bullish candle, it would be aligning to the daily time frames support at 261, and even on the weekly time frame also we have this big inverse fair value gap between 269 and 262. So this area may act as a good support in the coming days if it pulls back. Moving on to Meta. As we discussed in the previous week, after filling this gap, it pulled back last week as the RSI got rejected at around 70 level. Currently testing this previous resistance area, and we can see a rejection candles from these levels. Like this, we have a breaker block. We can see a rejection at this breaker block or previous resistance. So if we get a bullish engulfing candle at this level, the previous resistance and the trend line breakout retest, it may provide support to move back up and break this higher high to form another higher high, because we are in this trend. Like we have a low and then we had high, and it formed a higher low because it broke this high. So now we got a higher high. Now we are forming a higher low on Meta. On the February retracement levels also, we are into this golden fib level of 61.8% and 78.6%. So if we get a bullish engulfing candle at this level, then it may be an opportunity to at least test this high. Looking at the weekly time frame, on the weekly time frame we got a long bearish candle. Bulls really have to defend this bearish candle to break this level resistance at say 750 and 786. Moving on to Amazon. As we discussed in our previous sessions, it was trading in between this range till earnings, and it broke down this line which it took support for 4 times. It broke down on Wednesday and then it dropped more than 4% on Thursday, aligning with the overall market, and then it dropped more than 5% on earnings day. At one point of time it was more than 10% down on Friday, but and it printed a green candle at the support level and closed at this resistance. Now looking at the February retracements, currently it is around the 61.8%. So let's see how the price action in the coming days on Amazon, because on the larger time frame we are still on the uptrend. So let's see if this forms another higher low on a larger time frame. Looking at the weekly, with this larger bearish candle, which looks like an evening star, and it break down this major support around this 211 to 212, can see this pattern on a weekly time frame. Head and shoulder. So it may want to come and test this longer time frame uptrend line. Like I have from here in 2001. This is a second touch. We have a third touch here. Currently it is at this support is 200 and the RSI is below 30. So the next support we have is around 191 level, and we have overhead resistance at this 211, and we have around 225, and we have this supply zone. Looking at Oracle, so for Oracle I noticed this bullish Harami candlestick printed on Friday, and this previous demand zone. This was a demand zone level on the monthly time frame for Oracle earlier, and on the daily time frame it printed a bullish Harami candlestick on Friday session after a big drop. And RSI is being an oversold level, and the weekly time frame it does at the 200 SMA support level. So earlier we took that level as a support, and it moved from 61 to 340. That was a wild move. Even in the previous times also, it was support here, here, here. It's a nice level to watch Oracle here. The daily time frame, it printed a bullish Harami candle on Friday. So we are currently into this support level around 135. This neckline breakout, previous neckline breakout of this inverse head and shoulder pattern. So next support level are 121.5 to 130, and we have resistance at around 167 and then 170 to 73. Currently the price is far down below this 20 EM and 200 SMA, so it may pull back to test those levels in the coming sessions. Oracle is in the critical demand zone to watch. Moving on to Blue All Capital and Corporation. There are earnings last week. So this one was in a downtrend, and this head and shoulder pattern played out. currently it is into this previous resistance breakout. So this was a major resistance on the larger time, weekly time frame or monthly. It was seeing rejection in April 2022 and November 2022, and then again on February 2023, and it broke out on October 2023. Now we can see a hammer candle testing this previous resistance breakout, and last week was the highest trading volume seen on the stock. I don't see that volume in the past. If you take a Fib levels between the all-time high and all-time low, the price is currently at the 78.6% Fib retracement, and it printed a hammer candle testing this previous resistance breakout zone, so which may act as a support this time to form a higher on a larger time frame. Even on the monthly time frame, it was previous demand zone. This red candle, the last selling candle before this strong upside move. So, and the daily time frame, a great level to watch out for the bullish reversal pattern setup. Moving on to KHC. So KHC, we can see a clear breakout of this falling wedge pattern last week. It broke out on Wednesday and it retested on Thursday, and then it printed a consolidation candle on Friday because we are running on Wednesday next week. Looking at the weekly time frame, also it broke out from that longer falling wedge pattern, but on a weekly time frame we haven't seen any change of market trend, though we have this larger bullish candles printed. The larger time frame, it is currently prices into this previous demand zone. So if this earnings helps KHC to break this resistance around 25.5, then the trend of KHC will get changed from this downtrend to uptrend, and any retracements to test these support levels, and we may be on good opportunities in the coming days. Thank you for watching.